where it isn't going to be, a lot of this isn't enforceable usually, but it opens that up a little bit more now that you can't actually put that compete. So I don't know what that looks like. Again, the effect is 2027. I don't know what that looks like from a legal perspective, but we definitely would try to get ahead of the game here by understanding what your non-compete clauses say right now, and talk to your HR lawyers or HR advisors to see whether you need to amend any of your contracts by effective date of 2027 here. So something to just keep in mind. And yeah, we'll see what happens in the next couple of years.
And yeah, there's a little sort of addition to this section here. Apparently anti-competitive practice, wage fixing bans. I've never heard that talking to small businesses. That might be for larger ones that do this sort of stuff. I don't know. No poach agreements, stopping companies from restricting staff movement between competitors. So, yeah, again.
I think that first dot point I've heard where, they give you a significant jump if you move across to, let's say, a competitor, but then they would lock you in for that salary for the next 2-3 years, no bumps anymore from here. So it's really to get you across the line, but not necessarily giving you any more bumps. So in a sense, they are evening out their salary increases. Bringing it up front in rather than kind of evening it out over the years, which, yes, again, we don't have the exact details what wage fixing bans actually mean and how they're going to prevent that. But there's also, it looks like they're talking about where businesses are colluding, where competitors are actually having an agreement, say, hey, you don't take my stuff, I won't take your stuff, and they're looking at adding that to the list of things to ban. So yeah, they're really trying to free that market up a bit more so that people can move around a bit more freely. Again, something that I would take into account if you are in a industry where there's a lot of movement of your staff and your key staff members, and really assess if this is going to change that in the next couple of years and allow more people to move. And if you can't do anything about it, at least you can prepare for it, right? So I'd keep that in mind.
Wunderbar. Alrighty. Okay. So the government has allocated $1 billion to the ATO for, I guess, further cracking down on tax compliance. So the areas that they're looking to do that is the tax avoidance task force, cracking down on corporate tax evasion. Again, if we're talking tax evasion, that's disregarding the law and intentionally doing naughty things from a tax perspective. If we compare that to tax planning, like the season that we're in right now, that's legal things we can do to reduce our tax bills. So it's not the same thing there. The other one is shadow economy. So yeah, basically cashies and off the book stuff. Again, it's illegal. Throw more money at it. Personal income tax compliance. So again, there's some individuals do their own tax and may make inadvertent mistakes throughout that process. The ATO has got quite good benchmarks, and they must be able to run pretty decent comparisons between returns to pick up common errors and things like that. So I imagine that that's just going to go and get a bit of a boost so that they can essentially bring in more tax revenue. And then this one here, tax integrity program, focusing on medium and large businesses and wealthy groups. So, I think this could start to affect our client base, where we might get more frequent audits or reviews or questions from the ATO about certain things that we lodge for small business owners. And it says medium or large, but even a few $1 million small business may still tick the box on even this wealthy group, income and asset dependent. Cool. And yeah, they're budgeting a bit of a clawback. Well, and I guess I say clawback. It's if people are currently avoiding tax through illegal means, the ATO aren't collecting tax revenue. So the goal is to collect this tax revenue through making sure people do stuff properly. That is the outcome they're looking for there. Also, they're funding the Tax Practitioners Board. So the Tax Practitioners Board is the government body that oversees tax practitioners, so accountants, and they're throwing them about $28 million over the next few years to target high-risk practitioners. So, who falls into this high-risk box. We've got incompetent or incorrect tax returns, or false or misleading. You know, people, accountants who are doing dodgy stuff. Poor compliance history for their own tax obligations, same with even their personal stuff. If there's allegations of fraud or crime for that accountant, or they promote aggressive tax schemes. So yeah, they're $28 million to focus on that group of tax practitioners. Alrighty, a bit of an employment update.
Yeah, and this is probably something that we're trying to find something that's consistent across small businesses that people have been feeling and seeing about job growth itself and cost of living crisis. That there was a statistic saying that there's $1 million new jobs created since May 2022, and 80% of the new jobs are from the private sector. So there's an increase in job growth, and unemployment is also expected to peak at 4.25%. How is this relevant is really, whether we look at, obviously you can break it down into industries and job markets within those industries. But where we're looking at is that there's more jobs, but there's still low unemployment. So I don't foresee that at least in the industries that we've worked with across allied health, across professionals and consultants and accounting firms, we're not seeing a large supply of people. There's still quite a lot of jobs that need to be filled and quite a short amount of supply to fill those jobs. So what it will fuel probably is still quite high competition for good talent, and compared that with those anti-competition laws and anti-non-compete laws that's going to come in 2027. We're going to see that even tighten even more, and possibly push up wage bills for employers as well. So I'm going to keep an eye out. And what I'm seeing more and more as well as people are, where possible, where they can, are looking at offshoring solutions. And there's other issues there. Obviously, there's legal stuff that you need to consider there, whether you can and can't do that. But I'm seeing a lot of businesses are having to, almost by no choice, having to offshore some of the jobs, just because they can't find the talent that they need to, or at the same time to maintain the level of service or cost to their clients itself. So we've kind of said this to even just to some of the accounting groups that we've talked to around pricing for yourselves. If we're expecting this to go up, that's something that's driven the inflation as well, where cost of services and goods have gone up because of the tighter supply of employees that's coming through. If you're not reviewing your prices to increase your sales for this year and the next following year, I definitely recommend looking into that, because I don't think this is going to be relief anytime soon unless you do something drastic to your team structure and looking at offshoring solutions. You might be able to still maintain a healthy profit margin. If not, you'll be mostly chewed away by increasing cost to deliver. So something to keep an eye out. It's not looking that great. We need more people to do great work here in Australia, but there's also really, really good solutions offshore that if you haven't explored yet, have a look at it, because we've had to also make some changes there ourselves. So that's a little bit about the employment.
And just touching on more wagey stuff, again, there's been slight wage price index increases. We've got 3% growth to June 2025 is what's forecast, and then 3.25. So it's sort of steady. And like, I think even in going back a couple of years in 2022, just to compare this, the wage price index equivalent in the accounting industry, I think it was 11% increase on average was the wages increase in that year alone, that calendar year of 2022. So it has slowed since that COVID time, where it seemed just wages were going through the roof. But I guess good news in a sense for businesses to be able to forecast not so crazy salary increases.
So this is another way that people are going to get some money in their pockets. So think of your employees or even yourselves if you do have HEX debts. They're changing the way they're calculating the HEX debt repayment, where currently it's based on your total amount. So let's pick 100K for instance. If we earn 100K a year, you pay 5.5% on that. So about 5 grand on the total amount, where they're going into a marginal rate of payment now, which is a massive change. We haven't seen this before ever. We're going anything below 67,000, you're not paying anything. Whereas right now, if it's below 54K, you're not paying anything. So there's a bit of an increase in that threshold as well. But also the good news is it's anything above 67 to 124K that you're going to pay 15 cents on the dollar. So it ends up being cheaper or less repayment overall as well. And of course, any income above 125, then you're paying the rate, the 8,700 plus 17 cents for every dollar that's above 125K. So that starts from 1st of July. As long as Labor wins and that continues, that's what's kind of one of the big changes I'm seeing. But they're also promising 1 June a big write-off of HEX debt as well. So and the kind of calculations is if you have about 20K of HEX, you're looking at about 5K taken off the balance there. They did this last year as well, but that was more with the indexation. So they kind of retrospectively people paid taxes on their HEX debts, or paid their HEX debts down, and then they retrospectively reduced the indexation. So some people got some refunds last year. But what this means from a cash flow perspective for either yourself, if you have HEX debts, or your employees, is it's almost like a pay rise that they get from by not changing your salary bands at all. So usually that gets deducted in there when you tick that box. I have a HEX debt. Those calculations of the payroll systems. Yeah, I'll leave that to them to update that next year. But those systems will essentially calculate a lower amount to withhold, and for them to keep more in their pocket as well. So it's good news. But yeah. It remains to be seen what happens, because election might be called in May, and if it doesn't get through, if they don't win, yeah, we're kind of at the mercy of that right now.
I guess impact on the taxpayer for this one is, let's say someone is earning 67 grand this year, they're looking at a $1,675, so just under $2,000 of HEX repayment. But next year it would be $0 because the threshold kicks in at 67 grand. As a business owner, what it might look like is, let's say come the month of July 25, if you've got a few team members, some of them on HEX, you'll likely be paying the HEX people more net cash than you were the previous month, and you'll have a little bit less in your BAS to pay in pay-as-you-go withholding.
So timing wise for cash flow, again, depending how big your team here is, it can be significant if you have, a big head count. But if you're paying fortnightly, it means more of your cash flow is required fortnightly or weekly, for instance, versus usually you're paying that in the BAS every quarter or every month, depending on your cycle as well. So there's a change of cash flow that will happen from 1st July because of that as well.
Yeah. Alrighty. Inflation, yeah, so they just released a little bit more figures. We're looking at 2.5% for the year through to June 2025. That's the forecast there. And yeah, just some of the factors is the cost of living relief, helping to ease pressure. Tongue twister. Decline in petrol prices towards the end of 2024. I still can't feel that. I think my vehicle uses way too many litres per 100. And then electricity rebates, which, yeah, I don't know how much that has an impact on inflation, but apparently they put it there for a reason. So maybe it did help a little bit. Cool. So yeah, again, it's nice not to see the 7, 8, 9, 10% inflation that we did through the COVID years. Take the edge off that. Oh, this is a reminder from last year too, Riz. You want to run through this?
Yeah, so every year every time we do this webinar, we're kind of getting closer to payday super. So consultation is still ongoing with businesses, and to see whether how this can work. But essentially, they're right now we're paying super, every quarter. So it's 3 months worth of super that we're withholding. What will change in the future if this all goes through is from 1st July 2026, which is like a year away. You will have to pay super as if it was wages on your fortnightly or weekly, whatever pay run cycle that you run on as well. Again, from a cash flow timing perspective, that's critical because that's usually quite a big bill that you pay on at the end of the quarter. Moving that into a weekly or fortnightly, monthly run, whatever your cycle is, we'll see that you need to you make sure that you have enough working capital to do that, especially if you're paying for your team members and then getting your revenue at the end of the month or at the end of the quarter. For builders, for instance, that's going to be quite significant in cash flow hits for them. So this is to battle the a couple of things. People not paying super on time. That's just a big issue. If you are currently paying super quarterly, it's a good thing for you from a cash flow perspective. But if, let's say, you miss that quarterly due date, I just want to remind everyone that it becomes non-tax deductible and you have to pay super guaranteed charge on that. Not fun, an extra interest on something that's already expensive. And also what you can try to practice is there's nothing stopping you right now to actually move closer to what they're trying to do, rather than going from 3 months to like weekly. You can start moving to monthly, let's say for now, or every fortnight, just clearing your super balance that's owing every fortnight instead. So yeah, what I would suggest is try to forecast, at least, if not actually put it into practice, to see how your cash flow would fare if you were to bring some of those payments up front. Obviously, if you're struggling with cash flow, that's a different issue, right? Like, we have to get that out of a hole first, then only you can try to implement this. If you are pretty diligent right now in putting your cash away for super and you're usually paying that on time, see if you can do that more consistently to kind of move towards this, because I think it is going to come through. It is only, I can't remember where the consultation is right now, but yeah, it's a year away.
And I saw some updated, ways they're going to handle things over the last couple of weeks. Didn't pay close attention to it because it's still a moving target. But some of the things I did see is that, how we were talking about the non-deductibility if it's a late payment. It looks like they're going to change that and potentially make the payment deductible even if it's late, but you will get significant penalties, and penalties are a carve out from tax deductibility. So it's still not a great thing to pay super late. But yeah, it does look like they're making it a little bit less intense, because, we've had clients where they've gone to pay super, the direct debit might have failed, and then they go and retry it a couple of days later. And because it's outside of that window, even by a day, boom, there's a, 10, 20, 30K payment that is not tax deductible, and a whole heap of paperwork to go with it. So yeah, it's a bit, what's the word? It's very black and white in how it's written, and even if you're out of the rules by a tiny little bit, you still get whacked with a huge downside. So hopefully that's squared up a little bit with the rewrite.
I might just add one more thing as well. We don't have it here, but this is something that's known already. But I just want to remind people that the super guarantee rate as well is going up for the 2026 financial year. So it's in the last couple of years, it's been going up by about 0.5% each year. So since 2022, it was 10, and then 10.5, 23, 11 in 2024, 2025, the one that we're in, it's 11.5%. Starting 1 July, it's going to 12%, but it's going to flatline for the next 3 years, so 26 financial year, 27 and 28 onwards. We don't foresee that increasing, at least for now. So yeah, it's kind of a bit of a double whammy in the sense that the cost is increasing, but also you're having to pay that a little bit more upfront. So something to take into consideration. If you have such a big team and super bill, it's going to impact your cash flow a little bit more compared to last year.
Yeah, I guess that's a good point. It depends on how your employment agreements are written, because if you've got let's say you're paying someone 100 grand including super, you'll actually have to adjust their net before tax wage down because it's inclusive. or if you've got your employment agreements written a certain figure plus super, then your payroll software should just sort out whatever the super calculation is. But yeah, if I roll back to the whole, like if we go back to years ago, it is in 2013, not 2013, 2013, where the super rate was 9%, and it was that for ages. But there was announcements there that they wanted to increase that slowly over time to the rate of 12%. So here we are, a few months away from that becoming reality. So yeah, and again, I don't see this moving up from 12% because, again, the jump from 9 to 12 was significant in the first place. So yeah, it might stay at 12 for the foreseeable future.
Mhm. Cool.
Well, that is.
Something just to add while we're talking about this, but something that's not
Mm.
changing is your concessional contribution caps for next year. So it has increased in the last few years, from 25 to 27,500, from 1st of July 2024, and going forward right now it's still $30,000. So again, when we're talking about tax planning this year, if we're putting some extra money into super, if you've got 30 that you haven't used this financial year, we can look at moving that money into a super environment, and use that for your retirement instead. So that hasn't changed this financial year.
Beautiful. Yeah, that was the change was the current financial year versus last.
Mm-hmm.
Yeah, very good. Alrighty. Well, yeah, as we said at the start, if you're not working with us as your accountants, and you want to explore what that looks like, then feel free to book in for an initial chat with one of our accounting team. The link for that is in the chat box. Other than that, that is all the content from the budget that we had to run through. Yeah, just in terms of wrap up, it was a bit of a non-event, especially for business owners, and even the headlines about it's a tax cut budget. We're here waiting another 15 months for the first of that to take effect, and it's negligible anyway. So yeah, confusing, but probably as expected. At least from my perspective anyway. So, all righty. Well, hopefully that's given you some insight and some understanding that, couple of things of note, but nothing substantial to change. And yeah, I guess I feel like saying sorry about the 20 grand immediate write-off thing, although yeah, I'm saying sorry on behalf of the government who announced it a year ago and haven't still put it into law yet. So yeah, again, it just makes it difficult for us to plan. As business owners of where to spend money. But anyway, that's the way of the road.
Yeah, I don't know. We'll see what next year looks like, because there is a changing of the guards, and yeah, usually there's also quite a bit of change on that first budget, as we've seen when Labour took over first as well. I don't know if it's going to be the same government again, or if it will be Liberal, or who knows. Yeah, next year we do this every year. So if you're wanting to join our webinars, we have all those other webinars and workshops that we do as well. Feel free to follow us on all those different social pipes that we have. But yeah, we'll see you at the next one. If you have any questions, we're here for another 10 or 5 minutes, and we can discuss anything that you guys want to talk about.
Thanks, Olivia. Thanks, Sue.
Thanks, Sue. Thanks, Olivia. Thanks, Sarah. Good to see you here.
Awesome. Thanks, Hannah. All righty. Thanks, Shari.
Thanks, Shari. Good to see you. Thanks, Kylie.
Everyone, have a fantastic rest of the week. Thanks, Julie.
Thanks, Julie.
We'll see you later, everyone. Cheers.
See you guys.